Hello friends, this is your host Rakesh Kumar. In the previous videos regarding head and shoulder patterns, we have discussed how to identify this pattern and what are the do's and don'ts while trading this pattern, and also we have seen a few examples of head and shoulder pattern in the live market. In the present video, we shall be discussing about how to identify the inverse head and shoulder pattern. It is also a very profitable and reliable chart pattern that comes in the category of the reversal patterns. It has only one major difference with respect to head and shoulder pattern, and that is it is formed in a downtrend, whereas head and shoulder pattern is formed in an uptrend. Just to remind you that if you have not subscribed to our channel yet, then you can subscribe to it now to get notification of the latest video uploads. And if you find this video useful for you, then consider pressing the like button below the video. But before we begin, let us have a look at the risk disclaimer. It states that the futures, stocks and the options trading involve substantial amount of risk. Your capital is at risk, the losses can exceed the investment. The information is provided as is, and the user of the information assumes the entire risk of any use it may make or permit to be made. So let's get started. So let's begin. To start with, I'll just try to remind you that we had a head and shoulder pattern which looked like this, and as I have said that the head and shoulder pattern had formed in an uptrend, so we needed an established trend which is uptrend, whereas in case of an inverse head and shoulder, which is a mirror image of head and shoulder, we need an established downtrend. I hope you understand my point, that we need an established downtrend where we have higher highs and higher lows. I hope that makes some sense. Okay, there are some who can understand this. Only who has seen the passions video, they can understand what I am doing here. Okay friends, I have given you a downtrend. It is an established downtrend because it has lower lows and lower highs. Okay, if I consider this as a high, then this is another high, and this is another high, this is another high, this is another high. Okay, so you see that the high has never crossed the previous high, so they are all lower highs. And on the other hand, if I say that this is a low, if I say that this is a low, then you will agree. Oh, sorry, did I do something wrong? I wanted to clone it. Okay, so if you, then this is another low, so now you get my point, that these are the lower highs and lower lows. So what we need a low. All these are the lows, but whenever we see that another low is formed which is higher than the previous low, that is an indication that now there is a possibility of an inverse head and shoulder formation. So in this case, if it is till now it is fine, but if we see that something like this is forming, if we see something like this is forming, okay, only until here I will say, I will stop it here. Now there was a formation of lower lows always, but here we have seen that a fairly better low, but which is higher than this big low here is formed. So we will clone it and write here as low. So now there are two lows which are higher than this protruded low, or which is this is the lowest low, I must say, and now it is forming something like the left shoulder, the head, and the right shoulder, isn't it? So this is forming like a left shoulder and right shoulder. So we will now replace them with the left shoulder and right shoulder. Left shoulder, okay, and right shoulder. So now we have the higher lows we have formed, and the one which is to the left of this, the lowest low, we have named it as the left shoulder, and one which was on the right side of this lowest low, we have named it the right shoulder. Okay, now we will go to the presentation, what all things are required. Recap we have already done. So in an inverse head and shoulder, what we need a prior downtrend. It should be an established downtrend. So we got one downtrend, okay, because it was having lower highs and lower lows, so it was an established downtrend. That one thing we have covered. Then we need a left shoulder. Of course we got a left shoulder also. Then we need a head and we need a right shoulder. Okay, we got a head also formed here. Now we will replace this low, the lowest low, as head for an easy understanding of the pattern. So now this is named as head, and then we needed a right shoulder and we needed a neckline. We got the right shoulder, which was the higher low than the lowest low. Now we need a neckline. How is a neckline formed? Friends, this is very crucial. You have to understand it so that you form the neckline correctly. A decline or a rise from the left shoulder, in this case, where it ends, forms a peak. In the same way, a rise from the lowest low, wherever it ends, it forms a peak. Now we have to join these two highs and extend them to the right. So you see, it makes some sense to you. So now this is our neckline. So this is the neckline now. Then what else is required for the pattern to confirm? We need a break of neckline. Now the high from the right shoulder should be able to break higher. Okay, if it breaks higher, then only this pattern is confirmed. Otherwise this pattern is not confirmed. But when do we enter the trade? Well, for us to enter the trade, so we need the retest of resistance turned into support. We need to check whether the resistance had turned into support or not. So from here we need to see and wait for the price to go back and test this previous resistance and check whether it gets rejected from here or not to the upside direction and an uptrend is started or not. So in this case, we will be entering the market at the retest if and only if there is a rejection of the market from this neckline. And in the end, we have to project the price target. So how we are going to project the price targets? We are going to project the price target by measuring the distance of the breaking point, which is here, to the head, and it amounts to be 161 points in this case. So from here only we will be measuring to the upside equal to 161 points. So we shall book profits when the price reaches 1.73202. 1.73202. So this will be our price target. I hope I am clear in this one. So that's all about the identification of this head and shoulder, which is inverse head and shoulder pattern. In the next video we will be discussing what are the do's and don'ts about this pattern.